All right, getting straight into it. Don't have time to wait for anyone today. Just start off with uh, stocks for a sec. So crypto's been tracking reasonably closely with Nasdaq and S&P 500 lately, so I think they're pretty important. One thing I wanted to point out is this rally has actually seen um, I would call that kind of bullish divergence with global liquidity. So this high here, the fact that global liquidity is actually making a higher than that and price hasn't got there yet, to me that's actually reasonably bullish. Just means there's more force, but we are getting a lot of sell pressure here too. So it's just kind of a matter of who wins. And at the moment, I think it's actually pretty close to positive gamma. So um, wait and see a little bit. It's a tricky spot right here, coming right up close to a new all-time high. But that, like this level here, has held pretty well in terms of global liquidity. I don't think I'd be really calling a major breakdown until that actually falls down below that. But um, at this stage, as we've talked about before, for anyone who's followed along, global liquidity peaked in the run up to this high here in 21. Since then, global liquidity has been on a pretty steady down climb. Now, some technical traders would probably look at this and find a potential wedge pattern here that if we break above that, things could get a bit spastic. I won't use that term again. It's probably a banned term these days, but it'll get silly through that level. So, and kind of there's a potential there for us to go nuts in 2026 in particular. But just be mindful that we are still at sort of suppressed levels of global liquidity, and in general, higher highs here have been seeing lower highs on liquidity. Um, and realistically, if we do roll over from here, that won't look great at all. So it's going to be an interesting week. This week in particular, the start of the week didn't see as much downside as what normally happens after um, bloody Thanksgiving. Week after Thanksgiving is normally after a pretty bad start. And there was some stuff down here that I would have liked to have seen it come back down into if it was going to put in a new higher low. Right now, we're just sort of grinding, and it's a tough one. You can't really short a dull market like that. But I think this week, I think there's a Fed decision or something coming up, that's going to move the market. And the fact that it's high coming into that is a little concerning because everyone's expecting the cut. Like if it's in the news, it's in the price. And if it wipes out from here, that'll be pretty nasty. I'd be looking at probably back down at least a sweep of these lows here, I would think. In which case, we would be probably putting in a lower high and then another lower low. So, still think it's going to be choppy. Like we might not get another all-time high, but don't think the proper like drop um, in terms of free fall, markets crashed, markets completely shot. I don't think that's going to happen until next year sometime. This stage, I'm just not seeing enough actual breaking of things yet. Um, all right, so that's ES. Quick look at the Nasdaq. The Nasdaq not getting quite as high is an interesting one. Yeah, can't really suggest too much there apart from tech being a bit weaker is a little concerning. Um, there are some, you'd probably call them breadth readings that suggest we could have some downside in the next few months, but generally, like XLV, it needed a pullback. Healthcare had been going pretty good, and the fact that XLV is pulling back, it is a defensive sector. If it breaks back down below this 150 level, back into here, back into 146 is okay. But if it bounces off 150, then I'd probably expect more downside on the normal markets. But for the time being, that pulling back does suggest there's a potential for regular markets to go up. So XLY, XLP, consumer discretionary is making a comeback, not making any new all-time highs or anything though, so that's one to be careful of. Equal weight looking even worse. That's looking pretty close to a lower high again, which would be continuation of this downside trend, which would suggest that the economy is not great. It's still above that previous high here though, so wouldn't panic exactly yet. XLY versus SPY, so consumer discretionary versus SPY. This is actually probably, again, I always tend to make these videos when everything's at a critical level, but you can see here, this is a fairly well traded level through this level. It's coming up from beneath it, which would typically look like a retest of a falling wedge, which is a very bearish sort of pattern, like the pressure's coming down. If we roll over from here, you'd expect that to come down quite a lot, in which case consumer discretionary is probably not going to go too well, which could affect the overall market. And because these are ratios, this could be both of these coming down at the same time. It's just one will come down harder than the other. And consumer discretionary is normally the one that gets hit hardest when there's economic downturn. So keep that in mind. Overall, nothing there. So it's consumer discretionary, equal weight versus SPY equal weight. And it's pretty much just in this big range. That there kind of looks like a Wyckoff distribution to me. Look at it potentially as a bear flag as well, but it's looking pretty. It could break either way, but it's not looking great, especially if we turn down from here again. Interestingly, XLP versus SPY is still sitting above that downward trend line. Generally, when we break that, we do expect more downside. Haven't even come up to this level here yet, so could be a nasty end to the year too. Like if this stuff keeps going. What do we got here? That was an old trend line, which kind of is sitting on at the moment. I would say you could potentially say we're retesting that. So we're not quite touching there. But yeah, if this starts to move up, if we break back above that 159 level here, or even let's say that 0.16 level, that would be fairly bearish, especially if we break above, retest, and then move away. That I'd expect a bigger downside run to start happening. So consumer discretionary, yeah, a bit of resistance at that previous resistance level. Consumer staples isn't exactly breaking records though either, so KRE, it's done pretty good considering, but I think this is one of those things where it goes up on the expectation of rate cuts. Now it's not going up that much. It's still below these levels here. I think I think this could be a sell the event. If we keep pushing up into the Fed rate decision, I think it's going to be a sell the event. I'd be surprised if it just keeps pushing through. And there's another reason why in a second, which I'll get to. Financials are still pushing all-time highs. This could again just be forming a distribution or an accumulation. I suspect it's more of a distribution, but we'll have a look at some other stuff in a sec. Home construction, still, again, we're not really making any decent highs here. And if this breaks down below there again, you'd expect that to form like a massive head and shoulders. If that falls down, this level in here, so 68 level, is going to be, or maybe a little bit higher, 70-ish. It's going to be the target, and that would pretty much signal that the market's screwed and we'll have some sort of reset on our hands. Home builders, same sort of deal. Retested the underside of this previous channel we had formed through here. That's probably, to my eyes, looking more bearish than not, but not really that definitive. Semiconductors had a good run, reclaimed that trend line. It needs to push new all-time highs, though, I think, realistically. So DJT Gold, this was another one that never really properly broke down, and the fact that it's retested this breakdown level from above and moved away, that's actually relatively bullish. And for transport's running at the same time as a few other sectors that it doesn't normally run with. So even, DJI in general looks like it's retesting this level. So I'd say that's another sort of one for the bulls there, that there could be a bit left in this yet. So yeah, Dow Jones Transport, once it broke that level, which would now be support, that's a pretty big level. All right. It'd be interesting to see what it does in this zone here. So we're now coming up into a resistance zone, but this is a big level to break out of, and it's tried realistically, 1, 2, 3, 4, 5, 6, 7, 8. This is sort of the eighth time it's tried to really properly break above this level. Hasn't retested it yet, but after you've tried that many times, it wouldn't surprise me if it keeps running for a bit. So this is, the overnight repo, reverse repo isn't looking too bad at the moment. Again, people are panicking over that little spike there. Secured overnight financing rate is a little low. The fact that it keeps coming down is a little bit of a red flag, but not too bad. What do we got? DJI. I thought I had done that. I've done that twice. Baltic Dry Index. So this is the shipping freight cost index, I believe, from memory. And that's breaking out. Normally, the economy's doing okay if that's breaking to all-time highs. Interesting. So VIX back down into these levels where you could see it spike again. But generally, a VIX closure above sort of that, like a daily closure above 25 is normally pretty good, especially when it pulls back directly from that. So VIX isn't really giving us anything. It has pulled back below, closed below this previous low here. So looks like a full reset on the VIX. Skew. Yeah, skews pulled back a little bit on Friday and Thursday, but made a higher low for a change. Still not making higher highs though. So this is an interesting one. If we see just looking at this trend line here, we see a break above that. That could lead to a bit of a blow off top. And the VIX 1 day, again, still just coming back to this level. And that's an interesting level. If it breaks below that, which it kind of almost has, but that's an interesting level for me. Ugh, better off looking at it like that. So we're just sitting right on it for the time being. If that bounces, then that could signify a decent pullback. But at the moment, given we've had a decent pullback recently, it's probably just going to be bounces, just like daily sort of pullbacks, met with buying demand probably. DAX is holding up, but again, these are looking a lot like distribution patterns on the larger time frames. Yeah, Chinese 50. I think it'd be interesting if that did keep pushing. Like medium term, next few months, I'd actually expect us to be making new highs, but short term's just a little sketchy. The UK 100, that's a fairly significant close below previous regions. Could find support there, but Jesus, that's looking like it's putting in a macro lower high. Japanese market's not doing as bad. When do we go? Oh, we got a lot of data coming out too. Oh, it did come out. And nothing huge. Consumer sentiment's up a little bit, which may help push us higher. Jobs this week. What's that? Tuesday-ish. That'll be interesting. And then the Fed interest rate decision on Wednesday, I believe that is. That will be interesting. All right. TLT pulling into support here. This previous support, previous resistance. TLT might sweep this gap, but I'd actually, like, just in the next couple of days until that Fed meeting, then I would actually expect it to bounce again. This is a big bottoming sort of pattern here for TLT, especially since we've broken. If we hold above this, like, it looks like a head and shoulders here, which could play out, but even if that head and shoulders plays out, it's only coming down into this region here, previous support level. It's suggesting to me that we are starting to bottom here, and I think the big players have been circulating money back into treasuries. Bonds doesn't look great. It's filling a gap here at the moment, but if we find resistance there, then I'd expect the whole thing to come down. What's this one? LQDIF. Is it? No. Oh, it's the Australian bond one. Yeah, LQDIF back into this range. That would have been a good buy off there, or switch. That's kind of where we found support on the S&P 500 and NASDAQ and stuff as well. So this is a pretty good chart to watch right now. A little bit concerned when we get to this level. It's been pretty solid support and resistance, this level, like massive level. If we break through that retest and confirm, then that would signify we're probably going to go up quite a bit more on markets. But right now, I'd be pretty concerned. Let's think confluence. What's going to happen this week in a couple of days? If we get this pushing up into this level, or even a little bit beyond, interest rate decision comes out, markets don't like something that's said or whatever the bullshit excuse is, it'll be a sell the news event regardless if this plays out the way I'm talking. Couple of days up, hits that, bang. The market doesn't like it, we come down. The retest of this the next time is going to be very interesting because that could lead us to potentially a pretty massive downside back into at least these sort of levels, I would think. In which case, we're probably going to be, you'd almost be looking to confirm that we've topped on the markets. To 10, looking at some ratios. Yeah. Interesting, some bull steepening going on there. Chinese 2 years up. Pretty flat though. Chinese 10-year. Not looking super convincing either. It's the ratio of all these different bonds and stuff like that that goes into the like part of the input into global liquidity calculation. Don't need to look at them. Let's have a quick look at copper. Copper still recovering this vector candle. We are at a pretty interesting level here though. This is where we had a bit of support previously, just above this high, but once we're getting into this region, if we're hitting that at the same time the market looks like it's potentially topping, that's going to be another pretty negative sign. Like if it rolls over at the same time or even beforehand, it's going to be a pretty decent signal that there's further downside to come, and it won't just be sort of a buy to dip sort of pull back and rip. Potentially, like it's going to be a choppy 6 to 12 months, I think, until something breaks, and then we'll be in a proper downward trend. Iron ore is pretty flat in this range too. Gold's struggling again with this same level. I haven't got back into gold, and I'm not interested in it at these levels. Not yet. Same with silver though. Silver is smashing gold though, which is something I've flagged ages ago. It was bound to happen. I did shift into silver mainly. And yeah, copper gold ratio is an interesting one. So beaten down. Like if this was to break and actually start moving to the upside, like this sort of thing, that's it. Well, that was post-pandemic, that run. So this ratio is a pretty good indicator that if there's something, like if there's a bullish market happening, then you would expect this ratio to be going up. And at the moment, still pretty firmly in a downtrend, but interesting little higher low here. So again, I think this market is just ready to surprise a heap of bears. Silver's getting pretty nuts, pretty overbought, but could keep going. Like silver can run pretty hard here. This is a little consolidation after a breakout. I'd be surprised if we don't find support. If it does want to come back a little bit more into 54, I suspect it's going to find a little bit of support there. Oil's an interesting one too. So oil's been pretty beaten down. Do we drop and flush this level and flush back into 35s? I doubt it. I think there's a war coming. I think that'll spike it. Oh, really interesting. I don't necessarily agree with everything he talks about, but Stefan Burns does a pretty interesting job of on YouTube of tracking sunspots and planet alignments and stuff like that. And it's hard to ignore some of the correlations between political events and earthquakes and volcano eruptions and all that kind of stuff, and what goes on the sun and between the alignment of our planets. So, in saying that, mid-January there's a pretty big alignment event which I would be watching out for. I think last time it happened, it was actually the start of World War II. Slightly different this time, but it's the same sort of planets that are involved. It's a pretty rare event. Yeah, well, freaking barely tradable that. Dixie is an interesting one. So the fact, oh man, Dixie retesting this level and breaking below, that's a significant level. So Dixie's actually suggesting that we go up. Right at this level, it looks to me that it's trying to break below this. If we get a closure below, let's say 98,425, that's going to be very interesting, because if it breaks this level, to me that's a breakdown, retest it 3-4 times, breakdown from that level. That's typically when the dollar's going down, stocks, gold, crypto is going up. Typically, not 100% of the time, but typically. It's something to pay attention to. The only issue, I guess, is yes, we had breakdowns here and stocks and that went up, but at the same time, we were getting money pumped into the system. A little bit of a different story here. So it could be that this would drop because people don't want the US dollar because rates are going down. So Dixie comes down hard. Japanese yen might become more attractive because interest rates might be going up there. Euro's becoming more attractive. That could potentially see Dixie come down at the same time stocks are coming down. The one that I would suggest is probably going to go the other way, potentially, is gold. Gold and Bitcoin with respect to the US dollar may run up, but it could be the case that we actually get Dixie and stocks coming down at the same time. So look at the Japanese yen versus the US dollar. It looks like it's trying to bottom there. I mean, this is a pretty good looking chart if you're looking for the US dollar to come down. Euro's looking strong. It looks like it's bear flagging above previous support. Yeah, I mean, it could come back, but let's just say US dollar doesn't look that great. M1, M2. M2 is high. Yeah, so I mean, this does play a part in this global liquidity index as well. So probably explaining why we got a little bit of a bounce on that. Yeah, interesting. Actually, the home price index is coming down. I think I mentioned that last time. Credit cards are up. Auto loans are still up. Australian house prices are still up. Percentage of stocks above 50-day moving average. It's pretty high. And check out this level. Pretty decent downtrend. pulling back from it as well. That's kind of looking a bit sketchy for the market. Mag 7 struggling at this previous level as well. Does have a gap to fill, but I could do that in the next couple of days. So yeah, Tesla's coming up to a real significant resistance level as well. Nvidia, well, it's struggling to get through this high volume area. Next level for Nvidia is probably actually going to be down around 146. If it pulls back, probably even a little bit deeper, just into this higher volume area. But volume's been pretty thin up around the top here, even though they've been trading for above this level here for since July. Well, that's 5 months ish. Pretty low volume compared to this sort of level through here. That could signal a distribution to me. Google, it's a good run. Looks like it needs a pullback though. And it's kind of waiting for it. Or we got distribution too. Dividends distribution is on Monday. I wouldn't be surprised if we see a sell-off on Monday or Tuesday. Tuesday probably. Actually, let's just have a look at that. Didn't sell off necessarily after this one. There was a little bit on the day. Bit of a sell-off after that one. That one was already selling off. This one here actually pumped on distribution. This one bottomed on distribution. This one was flat. Yeah, interesting. Not really a great read, but it wouldn't surprise me. Which would kind of be in confluence with a sell the news event. Some of these things starting a little bit before. Microsoft, good bounce off this previous high, but that double top pattern's looking pretty nasty. Have we played it out yet? I'd actually expect it to play out from there. Back down into 432. Potentially going to have a bit of confluence around there as well. Previous highs, previous support, resistance. Yeah, probably somewhere around there. And then from there, I would expect some pretty choppy 6 months, I would think. Okay, good bounce off that level. That was another sort of level that said, okay, if we have a bit of support here, S&P is potentially going to have a bounce. I mean, it was the weekly 20 EMA as well, which you would expect a bounce from that given the history of it. Interesting failure level for that run up on Apple. Is that a good enough level to look at for support? Possibly. Probably something like that more so. We may have just topped on Apple though. Meta. Oh, sorry, 3M. 3M, interesting little breakdown there. Kind of broken down from that wedge actually. It'd be interesting to see if 3M, if it pulls up again and then breaks back below these levels. Another sign that the overall economy is not great. Oh, it's a good retest of that previous resistance level there on Amazon. Not looking good. Meta could close this gap. That is a massive gap. They just got belted on that earnings. Um, yeah, I'm expecting all sorts of rotation happening here. So as I've said, I think we'll get a lot of choppiness. I don't think it'll be any massive run, but there is still a little bit of hope for the mega bulls. It's just fading quickly at the moment. Oh, SMC. If that retests this sort of level and falls again, like that's a pretty consistent sort of sell off there. So a bit of a bounce, resistance up in around 39s, and then a pullback. That's going to be reasonably bearish for semis, I would think. SML, yeah. TSM. Interesting, Stellantis has finally broken above that resistance level there. It's going to come up against more resistance around 1242, but it's these sort of charts that make you think, okay, this isn't a Wyckoff distribution. If this pulls back, retest, and then goes again, it's going to be a fairly bullish sign for markets overall. Ford has closed its gap and pulled back, as mentioned in the last video. It's already had its distribution, so looks like a bit of a bull flag here, but just be careful. This is a very highly traded zone here, and given the state of the market, it'd be a tough buy right there. Australian market has not reclaimed anywhere near as much as what the US market has. That was a great target there. 8404. Looking at this, you wouldn't expect this to be breaking to new all-time highs. We might see next couple of days, we might see it find resistance here at that level. Let's go. Okay. So back to Bitcoin then. Look, Bitcoin's trying, eh? Today will be interesting, like the Sunday Aussie trade / Monday morning, which is the US Sunday trade, will be a very interesting day. I think it should continue to the upside. The advanced decline line as well. It's actually not really showing us any major issues. It's broken back above these two previous highs, retested and moved away. If we break back down below these moving averages, then yeah, okay, you've got an argument there that this could be a pretty major topping signal for the markets, stock market in general. Sailor shift ratio, I'll have a quick look at that. It's still in the sell zone, but interesting that Bitcoin is starting to make some ground against gold. All right. So it's not exactly a buy signal yet on that particular indicator, but the fact that it's turned up is a little bit bullish for Bitcoin. Have a quick look at ETH too, because it's sort of reclaimed the 3,000 level, which is a pretty important level. I got my level just above that, but you could quite easily argue that it was around the 3,000 mark. So yeah, looking okay, very heavily traded, lots of volume through these levels, rejected off that first volume node there. Probably do the same thing at this volume node. Again, I'm expecting choppiness. I'm expecting potentially, there? Something like, probably not like that actually. Idiot. Probably something like this. And then whatever happens after there, we don't know. It all depends what the market's going to do, I think. ETH's looking not too bad just because it's getting a bit of institutional investment, but I think you guys know that I'm not a huge fan of following the institution money. In fact, when it peaks, the inflows peak, that's pretty much when Bitcoin peaks as well. So just be careful of that. Now I'll just bag this one. So it looks a bit messy, but just wanted to point out that we sort of broke below. I think I've got this as a, what's that? 1, 2, 3, 4, 5. Yeah, like a 5-day. 5-day 25 and 1 Bollinger Band. And then this is obviously the daily Bollingers. That was a good break back inside, retested the bottom, found support at the lower Bollinger Band, 1 standard deviation. Now it's sort of consolidating. We've got a squeezing at the Bollingers happening. I'd expect this to stay around the middle a little bit more. Realistically, on the daily, we can't get too bullish until we're actually back above the weekly VWAP, monthly VWAP. They're both above us at the moment. And the two, the 9 and the 13 EMA, are pointed to the downside. We are below them. We're below the mid-band of the Bollingers there. But the bullish signal here is that we're actually above the second standard deviation on the longer term time frame here, and we've broken inside it, we've retested it, and we are looking like we're moving away from it at the moment. It's not confirmed yet. We need to really break above, like realistically 90,500, like a proper break above there and retest. Better yet, we get a turning up of the Bollingers here, the daily, and we start pestering the top here again. Then you can start getting a bit excited about more upside, because the next target is the daily 50 EMA, which is basically the same sort of level as the 1 standard deviation on the higher time frame Bollinger here, which is typically a pretty good target once you break back inside the outer Bollinger. And it is the upper Bollinger on the daily time frame as well. Other one. So, and then we can start talking 200 EMA, which at the moment's around 103,000, and potentially point of control. So you got the bottom of the value area low, or the bottom of the value area there, and the point of control for fairly decent time frame worth of trading. Basically, this whole run up, run down. Wouldn't surprise me if we get up and we have a retest of this around the 108 at some stage. Just quickly go over the shorter time frame. For those in the Discords, send me your TradingView username if you want a copy of this. But basically, trend is up on the 15-minute time frame at the moment. It was a pretty good bottom off that second standard deviation Bollinger there. This, I think that's the hourly. No, that's even longer than that. That's like a 4-hour Bollinger, the red one. The hourly is the blue one. So the hourly Bollinger Bands have actually started to expand, which is a good sign. We're above the 1 standard deviation here. That's a pretty bullish sign. We've actually started to turn up on the mid band of the longer, or both Bollinger Bands. We're above the VWAPs, so the daily VWAP, yesterday's VWAP, we're above them. Still below the monthly, and we rejected off there once, but it looks like we're building some momentum to actually try and push through that. Okay, last time we tried, Bollingers were still contracting, on the higher time frames. It was good attempt, but ultimately it failed, and haven't really recovered the entirety of this vector candle down here, but It's not a bad recovery, really. So did leave a nice little juicy one down here. There'll be some long liquidations below that if it wants to go down there. But I suspect if we break above this weekly, monthly VWAP, that's going to lead to a pretty decent upside. Probably some resistance around the 9,200 to 9,500. But ultimately, I would expect this to be the start of something more to the upside, which is a weird one given some of the signs with stocks and Dixie and stuff like that. But if Dixie does pull back, gold and Bitcoin can run at the same time potentially. Probably Bitcoin more so than gold. That will be an interesting lead up into Christmas. So it's not going to be a straight shot, I don't think. There's not enough retail in it. It's just a dull, low volume market really at the moment. But in general, I would expect us to chop up sideways and up over the next month and a bit. Just what I'm looking at the moment. BTC USD longs. Now, interestingly, we did start to see a bit of a plateau. We did see a bit of a pullback in the momentum on this as we started to come up. So I think these guys have started to say, okay, I'm in here. I'm going to start to take some profits. Buying back in still, though, when it pulls back. But they are starting to take some profits. So that's a good sign. Once we actually start to really turn over, it typically shows you that there's we're starting to find a bottom, essentially. Same sort of thing here. So after such a long period up in this area, I'm expecting a decent run up. Looking at this on its own, that's what you would read it as. Correct me if I'm wrong in the comments, but that's what I'm thinking. All right, I gotta go soon, but what I want to do is just quickly. So sentiment's an interesting one. It didn't take much for retail to start getting excited again, and they are excited again. But smart money started pulling back straight away. Like they're selling pretty hard on these little rips. So that's a little bit of a concern for me that we may not have found the bottom of this little pullback yet. We may pull back a little bit further. But I think crypto is going to kind of it could pull back. At the moment, it just doesn't, not leaning that way right now. So it could be just another one where retail's just picking this run up better than smart money, but just something to keep in mind. This is an interesting chart. So 3-month liquidity maps, liquidation maps. That's a pretty decent upside target there. So you'd expect at least 96,800 on the next push up, maybe into 98,400-ish. But realistically, there's resistance up here around 100 as well. So 99,500-ish. We could have push up, pull right back. We could pull right back into 75 before we have another major bounce. We might be done. It might get to 98, 99, and then bam, 75 is the next level. But at this stage, there's a lot of liquidity here to grab before it starts to balance out. So we didn't have that many longs coming in. People were getting wiped out through here. There was just no liquidity left in the market. So it would not be abnormal for Wall Street to just pump it. And this is another reason why I think Bitcoin in particular is headed to the upside, because there's some big trades that have come in. So big level 903 at 94,450, and then 95's got a couple of big levels as well. So these ones have now sort of tapered off. We hit a lot of decent orders through that drop there. There is another big one. What's that? 75k. So just be wary of that, be careful of that if we break down from here. But at the moment, it looks more like we're due for an upside push. And we are seeing some of the sellers come in with decent orders on the books at the moment. And look, the whale index has pulled back a bit. It's at a pretty decent level for a little pump. And the only thing that concerns me actually at this level is we have actually come down below this previous low on cumulative volume delta on spot. This was a big low for futures CVD. We haven't broken back below that yet. So there is a little bit of a potential uptick happening here. Just a little cautious that there's been a lot of selling into this rally here and on this pullback. So could be a bear flag happening here. We could drop a little bit more, which would play into the whole narrative around expect a pullback on the news events this week. So choppiness, I think, is the order of the day. XLV is getting a fair bit of action around the tops here, but to be honest with you, these look like buys after a pullback. It doesn't look like this. There was no big buy up around the top here that led to this pullback. I think this is just reaccumulation. So I think XLV's probably got a bit more to go. Coin 2x long. A couple of little trades here. Maybe take profits, but there's been a few decent ones on the way down here. So maybe another little push up. If we're starting to get into this area here and Bitcoin's hitting that 95k-ish, that would be interesting. Coinbase, a little concerning here. These could be buys, but it is above a key sort of cluster. So hard read, that one. XLK is pretty flat over the last month. It's a wild candle. I don't know what's happening there, but yeah, a few big trades recently on a couple of these indices. So just be careful. If it goes, it's going to go. I think it's going to go reasonably hard in either direction. XLI, interesting buy off the bottom. Looks like these were sells into the top though. Doesn't seem to have mattered. Just kept going. So industrials had a bit of interest. Marathon Digital looks like a bit of accumulation down the bottom here. So that's probably a plus side for the bulls. XLE, again, I think these are accumulations on oil and that, and energy in particular. Financials, nothing really to write home about. A bit of a sweep there. That was a good signal that we're going to have a change in direction. Nothing really at the highs yet though, so potentially more upside. Just be careful in the lead up to the FOMC though. Interesting, looks like accumulation here for IBIT at the lows. Yeah, I'm kind of expecting a move up on Bitcoin looking at this. Block. Yeah, I think these are Bitcoin miners. Another interesting sweep here on another Bitcoin strategy ETF. Yeah, I think Bitcoin looks like it should be bottoming just based on that stuff there. All right, I think that's it. Hopefully that was useful. And yeah, good luck in the next weeks into Christmas. I don't know if I'll do another one before Christmas. Probably will, but especially if I see something decent happening. But yeah, breaks above 9,500 for Bitcoin on reasonably high time frames, I think are going to be fairly bullish going into the new year, unless something breaks. Catch up.